The Engineers India Limited Q4FY24 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital Advisors Limited. Thank you, and over to you, ma'am.
Good morning, everyone, and a warm welcome to the Q4 FY24 and FY24 earnings call of Engineers India Limited. We have the management today being represented by Mr. Sanjay Jindal, Director Finance, Mr. Suvendu Padi, Company Secretary and Investor Relations, Mr. R.P. Batra, Executive Director Finance and Accounts and Investor Relations, Mr. Sunil Saxena, Executive Director Technical and Investor Relations, Mr. Amanpreet Singh Chopra, Senior General Manager, CMD Office and Investor Relations, Mr. Vivek Meeda, General Manager Marketing, Business Development and Investor Relations, and Ms. Neha Narula, Senior Manager, Company Secretariat and IR. I'll now hand over the floor to Mr. Jindal for his initial remarks, post which we'll open up the floor for Q&A. Thank you, and over to you, sir.
Thank you, Ms. Bhumika. Good morning, everybody, and warm welcome. We have declared our annual results for the financial year 23-24 on 28 May 2024. Our standalone informations are as, with respect to financial performance for the year ended 31st March 2024, on standalone basis, the company has registered turnover of rupees 3,232 crore in comparison to rupees 3,284 crore in the last year ended 31st March 2023. The turnover from consultancy and engineering segment stood at 1,454 crore, and from the turnkey segment was rupees 1,778 crore. In the fourth quarter, the company achieved a turnover of rupees 790 crore with turnover from consultancy and engineering segment amounting to rupees 388 crore and 402 crore in the turnkey segment. During the fourth quarter ended 31st March 2024, the company earned a profit after tax of rupees 91 crore in comparison to rupees 50 crore earned in the previous quarter ended 31st December 23. During the year ended 31st March 24, the company earned a profit after tax of rupees 357 crore in comparison to similar profit of rupees 342 crore in the last year. The company is having a healthy earning per share of rupees 6.35 as comparison to last year of 6.09. Other income during the financial year 23-24 increased to rupees 225 crore as compared to rupees 169 crore during the last financial year. On the consolidated front, the company earned a profit of rupees 445 crore for the year ended 31st March 2024 in comparison to rupees 346 crore earned during the last financial year 22-23. Therefore, there is an increase of around 29% in the consolidated profit on year-on-year basis. During the financial year 23-24, the order inflow in the company amounted to rupees 3,406 crore. The overall status of order book position as on 31st March 24 is 7,823 crore in comparison to 7,695 crore during the last year. Further, during the current financial year up to 29th May 24, the order inflow is 1,230 crores, and after including the go-ahead from our client, the same works out to be 1,835 crore. Further, during the current financial year, EIL trade receivable reduced considerably during the financial year 2024. The data stood at 314 crore during the financial year, and in the last year this was 353 crore. the debtor as on number of days of turnover has declined to 35 days during the financial year 23-24 from 39 days during the financial year 22-23. Thank you, Bhumika. Bhumika, it is
yes, sir.
Now it is up to you.
Yes, sir. Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Noel Vaz from Union Asset Management. Please go ahead.
Yes, sir. Just one question. So regarding the expansion which is going on at the New Maligarh refinery, are we involved in that particular project from the expansion from 3 to 9? Yeah, that is my only question. Thank you.
No, this expansion is being done by some other consultant. We are not part of that expansion.
Okay, thank you.
A part of the expansion project, there is the pipeline that is being done by DIL, and there is another unit which is not part of the expansion. There's a coker, so that is being done by. That is being done.
Sure. And just one follow-up. We currently have about a small minority stake. Is there any plan to monetize this as such, or some clarity on that? Thank you.
No. There's no plan for monetizing as of now because it's a long-term investment.
Okay, that is all from my side. Thank you.
Thank you. The next question is from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, sir. Good morning. Thanks for the opportunity. Sir, first question, we used to guide about 4,500 to 5,000 crore intake, and we saw roughly about 3,400 crore, and that too in consultancy I can see 500 crore coming from overseas market this year. So just wanted to understand, was there any major slippage in order, and also would like to understand what are the key orders in consultancy side and turnkey side, which we are now considering as a pipeline for FY25, and if you could highlight the value also. Yeah.
Good morning. This is Vivek from Marketing and Business Development. Would like to answer that question. We were negotiating few of the contracts towards the closure of this financial year, but those could not be concluded at that point of time. And those exactly got concluded after the completion of the financial year. So that's how you have seen that kind of impact. For your information, as of now, as of today, we have reached almost 1,800 crores worth of business, which includes the awarded works as well as certain go-aheads are already been given to us. So those orders got realized late. Most of them got realized in April itself. So that is the impact that we could not reach the earlier promised figure of around 4,700 and 500. So similar kind of figure we have already reached in 1.5 months. In approximately 2 months, you can say.
So you're saying, sorry, yeah.
With respect to the future prospects, there are still major opportunities available. There are two major petrochemical complexes are in the bidding process. We are in the process of bidding for that. They are in the open market. Let's see. Those will be realized in a couple of months' time. Internationally also, we could partially close one of the petchem complex, and the balance part is still pending, and it could be closed in a couple of months. It's there. So there are a lot of prospects out there in the market itself for the refinery and petrochemical. A lot of projects are there on the anvil. So we see that we should be able to get good business out there. As far as this, at least the last time's figure we should be able to make, unless there is any exigency happens. But we are on the actually good track right now.
Right. So apart from this 1,800, you said YTD we already did. So can we expect 3,000 to 4,000 more in the remaining 9 months?
Yes. If this pace continues, we have opportunity for getting 3,000 to 4,000 more.
And so, how is the expectation on mix consultancy versus turnkey?
It primarily remains the same. It's always 50%. Sometimes LSTK goes more. This time LSTK has gone more, and consultancy has got reduced. But it is going to be more or less in the same ratio, consultancy and LSTK. LSTK is specifically OB. It's more of a kind of consultancy only. So we don't take the high-risk jobs. They're comfortable jobs. So we'll be targeting OB projects only in the LSTK segment also. So ratio is going to be just similar as we were having earlier.
Right. Second, on the revenue and margins, again, the top line also did not grew too much, though we were, expecting some growth for the full year. And second, so wanted to understand what is guidance now for FY25. And second, on margins, now the turnkey margins appears to be on EBIT level of almost more than 4.85% for past 2 quarters. So what are the expectations of margins now? And on the top line, was there any slippage, and what is the outlook for FY25?
Basically, as you know, we are operating in the cyclic nature of industry, and our turnover basically depends upon the orders in our hands. Though we have a handsome order book of 7,800, but in the last year we were expecting some new orders, and we were expecting some turnover from that new jobs also. But these new jobs were shifted either in the late month of March, or it is coming in the first quarter of this year. So there is a 2 or 3% down in the turnover portion. But on the margin side, you may please see there is increase in the EPC business segment. Earlier, our margins were in the range of 3 to 4%, 3%. Now it is more than 5%. And in the consultancy segment also, we are maintaining our margins.
Sure. So lastly, on the all the sunrise sectors which are highlighted, and we saw past couple of days there was announcements on coal gasification fast tracking, and there was announcement a few months back on bio-related sectors. There could be policies coming in. Wanted to understand, are we expecting anything significant for EIL in FY25, whether it is green hydrogen pilots, which we are already doing, compressed biogas, coal gasification. So just wanted to understand the opportunities here in 12-24 months for us.
With respect to the sunrise sectors, we have secured the business part. I think in the range of 8% of the total order value has come from 8 to 9% has come from the green areas. So with respect to the coal gasification, we are in touch with, we are already executing few of the assignments in coal gasification. Some of the studies we are doing, and we are also in touch with a few more private investors who are interested in developing coal gasification based on plant. One is in the steel industry, which is a coal-based coal gasification-based project, and they are thinking of going for the DRI plants. So we are in touch with a few of the private investors in this sector. Because mostly in coal gasification, it is coming from the private companies only. And in also recently the Coal and BHEL, Coal India and BHEL have also signed an agreement. They are also anticipating a major commercial project. So we will be also pursuing that project too, and other projects of Coal India also, which would be signed after this, because they also have other 2 more projects in the pipeline in future, wherein they would be investing and setting up those projects. So we'll be pursuing those public sector projects also.
So on compressed biogas, are we expecting orders this year?
Sorry?
On compressed biogas, CBG?
CBG, yeah.
CBG, on the CBG, actually the plants, all the OMCs are in the process of preparing the DFRs, So when the DSRs will be converting it to a real investment, that we are expecting during this year. So we are expecting a pie of the CBG plants as well. But that once the OMCs will take investment decision, then it will go for the execution stage.
Thank you, sir, and all the best. Thank you.
Thank you. The next question is from the line of Prathamesh Salunke from PL Capital. Please go ahead.
Hello. Yeah. Thank you so much for taking my question. I just had a simple question in our order intake. So in our presentation, we have said that one of the jobs awarded in Q3 was considered in consultancy, and now it is considered in turnkey. Just wanted some more color on it. Which order was it exactly, and what was the value of it?
It was a consultancy assignment. It was actually a depository which was received from the Intelligence Bureau. It was the construction of their office facilities. It was worth 350 crores. So initially we were thinking of we were having a discussion with the client with respect to whose PAN and TAN needs to be used. Initially they were not agreeing. Later on they agreed on the philosophy, and we could convert that into a depository mode. So that's how it was shifted from the consultancy to further in the LSTK segment, because we could convert that into depository mode.
Okay, understood. Yeah, thank you so much for answering the question. All the best.
Thank you. The next question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Hi. So as you just mentioned about the project that moved from consultancy to turnkey, is there any change in value given that the project has now become a turnkey project?
Should you use your handset, please?
Voice is not clear.
Okay, one second. Hello, am I audible now?
Yes, ma'am. Please go ahead. Thank you.
Yes. So the project that you mentioned just now that has moved, is there any change in value since the project has now gone in depository mode?
So there is no change in value as of now.
Okay, there's no change in value. A couple of other questions that I had was that this year finance cost on the consolidated level is much higher than before, and so is the other income. Could you just give me some color on that?
On the consolidated basis, definitely our profits have increased from 346 crore to 445 crore. This is mainly on account of our share in RFCL project. In this year, EL share was 85 crore in comparison to last year's figure of 2 crore only.
Okay. And what is the reason for the increase in interest cost?
Other income, madam, we have settled a change order with our client, and the major portion was some portion was in the fees portion, and major portion was towards the interest on the long outstanding payment. So that's why there is increase in the interest payment. We have got around 55 crore interest from our client in settlement of our change order.
All right. And lastly, could you give me some guidance for FY25 in terms of revenues and margins?
Definitely, madam. As you know, we are in the cyclic nature of business. Though we are having a strong order book of 7,800 crore, and we have good order flow in the first quarter itself, and we are sure that there will be increase in the turnover as well as in the PAT. But at this moment of time, we cannot quantify. But definitely, this will be better than this year.
Mm-hmm. So revenue, can we expect single digit or low double digit growth? Is there some color that you could give possibly on that?
Because we are in the cyclic nature of business, it totally depends on the order inflow during the current year also. Therefore, it is difficult to quantify, but we assure you our performance will continue to be better than last year.
All right. And my last question would be on JV profit. This year, JV profit has grown astronomically. And what is the outlook on that for the upcoming years? And also, if you could give me a breakup of the JV profit as to which JV is how much coming from?
Coming from our JV, Ramamundam Fertilizer Corporation Limited, we are expecting the more than whatever we have achieved during the current financial year. We expect the similar, rather more than that particular profit in the coming year also.
Madam, in the coming year, we are expecting more than 100 crore from the RFCL project.
All right.
Because plant is running at around 85% capacity, and in the current year it is expected that plant will run on 100% capacity, and it will generate more and more profit, and our share will be more than 100 crore in the coming year.
Okay. Thank you so much. That's it.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Bhumika Nair from DAM Capital Advisors. Please go ahead.
Yes, sir. So just wanted to understand our, you said about 1,800 crores of order intake. Is it possible to get a breakup between how much would have been consultancy versus LSTK of this 1,800 crores?
It is approximately 1,000 crore is coming from the LSTK and balance is coming from the consultancy.
Sure. Thanks. The other question was, regarding international orders. We were expecting one from Nigeria, some more in MENA region, including Saudi and Abu Dhabi. So if you can just give some, what is the status out there? When do we expect these orders to come through? And how large can possibly the size be of these 3 large orders?
With respect to this order in Nigeria, actually we have closed the order which we have booked in this 1,800 crores. We have booked that order in this 1,800 crores. It's a smaller value right now. It's to the tune of 70 to 75 crores. But the major value is about to come in a couple of months' time, because we are negotiating the contract with them, and that's a bigger contract. We'll be able to close it in a few months' time. Because they are also, client side is also taking some time, and they want to do the initial phase 1 and then proceed with the next phase. So we'll be shortly closing the other part of it, other part of the contract, which will be larger than this, much larger than this. And with respect to the Saudi, right now we are in the initial stages of Saudi. We are setting up an office, so it is going to take some time from Saudi. However, we have done quite significantly in the Middle East market, specifically with respect to the Abu Dhabi. In UAE, we have been doing a lot of consultancy business. It has increased in a good way. If you see that out of the total business, what you have seen overseas, 50% has been considered from the that market, Middle East market, and 50% has come from the Nigeria market. So that kind of contribution is that the Middle East region is doing, and we are expecting it to grow further.
Okay. So, are we expecting any larger sized orders from the international markets from any of these?
We are expecting, I've told you, we'll be concluding a major contract in Nigeria.
No, I meant Middle East, sir. I meant
and some jobs in Middle East are also in the process. If they are successful, then we'll have a good news for all of you.
Okay. And so there was also this IOCL Paradeep order, which was to be, what do you say, the petchem order.
It's a tendering process, ma'am.
Okay. So
tenders are in the market.
Okay. And any other IOCL petchem orders or refinery orders which are there in the pipeline, which may come up?
Majorly, the Paradeep is there in the market. IOCL's only one project, major project, is right now continuing.
Okay. Okay. And from the Bina refinery, sir, what is the status out there? I mean, when will that likely come?
It's also in the market, ma'am. There are 4 packages which are in the bidding process. We hope the results soon. In a month or so, you will get to know what will happen.
Okay. Okay. Got it. So from that perspective, given that we win a couple of these orders, would it be fair to say that this year, in consultancy, we could probably see the order intake going towards 3,000 crore kind of a number, or do you think that will be a little difficult?
So it would remain, if we see the total order value towards, as of the earlier perspective, it was around 5,000 crores, and out of which 50% came from the consultancy. So we at least can achieve that kind of order value from there. If we get more, it would be good for us, and we are trying towards it. More consultancy would be always beneficial.
Right. And so here now, how, when you're bidding for all these projects, whether be it IOCL, BPCL, or, others in the domestic market, how is the competitive intensity? And, earlier we used to get a lot of orders on nomination basis, but now there's a lot of ordering and L1. We've seen the consultancy margins, which used to be around 26-27%, going down to 22-23%. Now, how should we think about margins? Is this 1 year, an anomaly, and we should see margins going back to the 25% range, or you think it will be closer to this 20-22%?
It depends on the project to project, wherever it is happening. It just depends on the geography. If it's outside India, geography, the margins would be more because less competition would be there. In India, there will be competition. Some would be negotiated. So it all varies. Today, also in the consultancy, we are around 22-24% in that range itself. So that's a good margin as far as the market is concerned, because there's a market. Naturally, the times have changed, competition has increased, a lot of companies are there, so we have to beat the competition and get the jobs. It's not the PSU market now. Even government doesn't support any PSU. They are asking us to fight the competition, so we have to fight the competition, and we are winning the job. At least we can see the track record in the market.
But in spite of that, we are maintaining good margin, around 22-23%. And figure of 25 is not far away. Because this may fluctuate on year on a year basis.
Understood. So one last question.
But we are very confident of 25%.
Okay. So one last question. What was the dividend income booked from Numaligarh in this year? And anything from Ramagundam?
Madam, around 30 crore, and RFCL Ramagundam have not paid dividend so far, and we are expecting dividend in this year if possible.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Nishit Master from Axis Securities. Please go ahead.
Yeah, thank you, sir. So my question was on two things. So one, you mentioned that obviously Nigeria, major part of the order is still pending. There were two other nomination-based contracts, big contracts, which we were expecting in India. If you could give us a status for that. And two, are we doing any projects for HPCL's Barmer, refinery, or you expect orders coming for Barmer anytime soon this year? And if you could give
projects. Barmer, we are in two projects. One is as a PMC, and one is as an OBE contractor. Those are almost on the verge of completion in times to come. The refinery is expected to be commissioned by the end of this year or early next year, just to be commissioned.
Okay. Any further orders which we can expect from Barmer on the downstream side, if there are more?
Let the refinery start, and let every refinery would go in expansions in future, and there would always be modifications. Those kind of assignments would keep on coming to us from there. It will not be large assignments, but if they future they try and think of expanding it, then naturally it would be a bigger assignment. But first let the refinery commission and then start operating. Then regular flow of income should be there from there.
Sure. Sir, and on the other two nomination-based contracts which we were expecting.
There are a number of contracts we are discussing, some of them on nomination, some of them on the competitive basis. Let them realize, because in one of the projects we were earlier thinking of nomination, that went into competition. So nothing is certain. So in any case, those projects are there on the anvil, and we are bidding and get some results in a couple of months' time, month or so, we get some good results.
Okay. So, and on the fertilizer side, are we seeing any traction?
Sorry, any?
On the fertilizer industry, from the fertilizer industry, are we seeing further traction on ordering?
Fertilizer, specifically any smaller works we can expect. We are talking to few of the fertilizer companies like Q4FY24, IFFCO and Ramagundam. All these companies are there. Wherever there are smaller works are there, we will be part of that. Consultancy orders could be there. There is no major anticipation of any major fertilizer complex other than what is expected in the green hydrogen, green segment from a private refinery, private investor. So that we expect in future.
Okay. Thank you, sir. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, do you see any tender from Petronet, LNG or GAIL in this fiscal year?
There are a number of inquiries are there from Petronet, LNG, yes.
Something this, I think they announced 20,000 crore worth of project last year. I think, are they looking for some consulting packages in this fiscal?
No, they are still in the initial stages of the project. We are doing some pre-project activities for their project. Let us see when they take the investment decision and proceed with the tendering. They will let us know.
Any last word from the GAIL, sir? From the GAIL?
GAIL, yes. Some of the projects there, they are also carrying out some feasibility studies for petchem plant in Madhya Pradesh, and some of the assignments are there for PDH-PP. We are in the process of that. We are engaged with them for their projects.
Understood, sir.
And regularly we get engaged with them for various engineering assignments from the GAIL, because it's a day-to-day activity with them.
Understood. My second question is on this coal gasification. Of course, I think there are some few more projects which looks like they will come up. Are you hopeful that this year you can see some consulting packages again from coal gasification, especially from CIL, BHEL, JV?
We are right now in touch with few of the private investors who are eyeing for the government viability gap funding, and they are taking funding. We are supporting them in their feasibilities and studies. So they get the funding from the government, so definitely they are going to execute. So this kind of assignment is there. Already we are executing one of the projects in coal gasification for Navijay Lignite. Its phase 2 is yet to start. So that is also in the anvil. Apart from that, Coal India has also set up a JV for the upcoming commercial project. So they would be coming out with the tendering in those assignments. We will be also discussing with them for the prospects in that project. That's going to be a commercial plant.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you. Thank you for this opportunity. So my first question is on capital allocation. Historically, if we see our dividend payout used to be upwards of 65-70%, and gradually it's come down, and this year it's been less than 40. We have also seen that excess capital, we have deployed in unrelated projects. So how is the management now thinking about capital allocation? That's question number 1. Hello.
Yes, Mr. Sharma, may I request you to self-mute your line, sir, once you're done? There's a lot of disturbance coming from the line.
Sure.
Can you just repeat the question, please, because there was a lot of disturbance in there.
Yeah, I'm sorry. So I was asking about capital allocation. Historically, we have seen that our dividend payout used to be upwards of 65-70%, and gradually over a period of time it has come down. This year it's less than 40%. And we've seen that excess capital we have deployed in unrelated projects. So my question is, how does the management and board think about capital allocation going forward?
In this year also, we have paid 60% dividend, 3 rupees on the face value of rupees 5. And we think that this is a good dividend comparing the industry. And be sure EIL will always reward their shareholders by way of dividend.
No, I was asking more about the allocation policy. So we are looking at payout rather than the face value as a
allocation policy is 5% of net worth or 30% of PAT, whichever is higher. So whatever we have paid, that is more than the policy.
My second question is on NRL. What's the share of the projects?
Sorry to interrupt, Mr. Sharma.
Yeah.
Your voice is breaking, sir. May I request
Voice
you
is
to
not.
answer?
Yeah, is this better?
Yes, sir. Sir, slightly muffled, sir.
Yeah, I'll try speaking a bit louder. So, sir, in terms of NRL, historically, what's been our share of NRL projects, and going forward, how much opportunity still remains in NRL and our wallet share expected in that? Thank you.
Our share is 4.34%.
4.37% is our equity there, and we are going to maintain that equity. And
no, sir.
NREP expansion is going ahead, and after NREP expansion, some modification jobs would be there.
Okay. No, I was not talking about the equity share. I was trying to understand the share of the work which has been given by NRL to companies like.
In business, right now the expansion project is being done by us, but few of the units like DCU and one process unit SRU is being done by us. And we are also eyeing for one of their upcoming polypropylene unit. They have plan for PP unit. We'll be discussing and getting those units. Last year even we got one aqueous ammonia project from them. So the projects are also being discussed with them. It's not that they are giving it on nomination. We are bidding and getting those tenders against the competition.
All right, sir. Thank you. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Ms. Bhumika Nair from DAM Capital Advisors Limited for closing comments.
Yes, I would like to thank all the participants for being on the call, and particularly the management for giving us an opportunity to host the call. Thank you very much, sir, and wishing you all the best. Any closing remarks from your side, sir?
No, thank you, Bhumika.
Thank you, Bhumika.
Thank you, sir.
Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.